This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go! Hello, and welcome to Fintech Recap, live from beautiful Las Vegas, Nevada, where we are here at Money 2020. I am joined by my favorite co-host, Jason Mikula, who I finally get to see in person after blowing you off last year at the same event. I apologize.
Yeah, to be fair, that was the weather's fault, not your fault, but I appreciate you showing up this time.
Yes. I felt terrible. I got a lot of flack from people who were like, how could you do that to Jason? I think there are more Jason fans than Alex fans. So anyway, my apologies. We're very excited to be together again, sharing our impressions on what's been happening at Money 2020. Jason, you're leaving tonight. I'm leaving early tomorrow. So we're coming to the end of our Money 2020 experience. Can you give me just your impressions from the show? Like, what stood out to you? You've been here a few times now.
This is my third year at the US event, yes. And it's actually really helpful to do this show towards the end of the conference, once we've actually had a chance to talk to people, go to some of the sessions, see what's happening. You know, I find that events like this tend to attract people who are generally positive, upbeat, and optimistic, which is nice because there is, a lot of things happening in the banking space, in the fintech space, in the crypto space. Not that I think you or I pay too much attention to that.
And there's not as much of that in our face this year at Money 2020. Yes. 2021 was crypto.
Yes.
This is I've struggled to find any crypto companies here, honestly.
Yeah, I think now it's the pivot to talking about tokenization of real assets.
Yes.
Crypto's a four-letter word.
Yes. So we've moved on to other terms.
Definitely some shifts in the trends of what's top of mind. And I think compliance and regulation are the hot buzzwords of the year. What has your experience been?
It's the same. I've gotten a little chance to walk around the exhibit hall. Generative AI is a big one. I've seen that sort of splashed on some of the booths. I don't know that I know what it means just reading the booth. I'm not sure they know what it means, having put it on the booth, but it's on there, so that's good. It's a lot of infrastructure, I guess, is the other thing. I've seen a lot of compliance, and I've seen a much bigger focus on infrastructure. In fact, the Federal Reserve is here, and they have a booth at Money 2020 and are promoting FedNow, which is fascinating. I don't know that they've done that in the past, but of course, this is the first time in 50 years they've released new infrastructure for anything that they need to drive adoption of. So they're out here selling. I don't know if they have FedNow keychains. I'm going to go after this and see if they do, but a lot of infrastructure, a lot of generative AI. To your point, people do seem pretty enthusiastic about being here. I've heard it's a little smaller and there maybe were some fintech companies that didn't come, but certainly a lot of folks. It's as busy as I remember it being.
Especially at the line in Starbucks, as always.
Yes. Yeah. That Starbucks escalator combo right there. You'd be like, I'm right there. And they're like, which one of the tall blonde guys with blue blazers, which one of them are you? So it doesn't tend to work that well as a meeting place.
Did you actually have a chance to make it to any of the sessions this year? It's always a struggle to carve out time to do that.
Yeah, the only sessions I made it to were the ones where I was mandated to be there because I was speaking or hosting. So I did get to see a little content, participate in a little content.
That's a good forcing function.
It is. Yeah, that worked. Did you get to go to any?
Yeah, I made it to a handful on Sunday and on yesterday. I mean, the ones that were particularly interesting, I did actually go to some of the AI and machine learning track, which interestingly were two discrete things on different floors.
Interesting.
In my mind, those are kind of overlapping.
Apparently not anymore,
identical, but overlapping topics.
Huh.
And to your point, I mean, there are these trend cycles. We're definitely in a Gen AI hype cycle. And for me, the challenge is parsing, reality from PR talking points.
Yeah.
Right? And we've transitioned from everyone saying, we're blockchain powered, blah, 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 to we're AI powered, blah, blah, blah.
Yeah.
And I mean, the way I'm thinking about it at the moment, which caveat, subject to change as I learn more about it.
How dare you change your mind as you learn more information?
Oh, terrible.
I know.
Is, AI, machine learning, blockchain, whatever, these are tools. They're not by themselves business models. And the lens I'm using is if you're looking at a company in the financial services space, fintech, bank, infrastructure, whatever, how are they leveraging that AI to build products? How does it impact their economic model, if at all?
Yeah.
And you know that I'm happy to name names. It's like, I think a great example is like Upstart. It's like, oh, okay, well, we're AI lending. And it's like, well, okay, but like the AI component is not what is driving the economics of your business.
Right.
It is a tool to decision credit applications.
Right.
But like your economics are derived from facilitating consumer lending.
Right. So you're not an AI company. Yeah. Well, I mean, I think on that point, the other thing I've noticed with the AI conversation and how it's evolved a bit is sort of trying to catch the AI wave without differentiating exactly which wave you're catching, right? Because, I mean, Upstart's a good example. They've been using AI well before this Gen AI wave hit and everything got really exciting. And so there's a bit of a like rebranding where it's like we've been doing AI, we're still doing AI, but we're also still not doing generative AI. But can we rebrand ourselves to sort of benefit from this AI wave and enthusiasm? And I mean, to me, the thing I'm looking at is if you're actually talking generative AI, I'd like you to be very, very specific about what it is that you're using generative AI for. Because I think the only thing I've walked away with as like a baseline understanding, and it's a complex topic, but my kind of core thesis is it just works fundamentally different than other types of AI or machine learning.
Yeah, absolutely. I mean, I think that's a great point. When I was in the consumer lending sector, as far back as like 2013, 2014,
the dark ages.
We were using, machine learning models. Yeah. And the tagline, the talking point back then was, we use big data and machine learning to better underwrite customers, applicants that, big banks won't. And so again, it's, parsing the talking points from the reality of like, how is this likely to actually impact your business, the customer experience, the economics, and I don't feel well enough informed to hazard a guess of the direction of travel there.
Yeah, no, I agree. I mean, I think the only thing that's kind of jumped out to me so far is much in the same way that neobanks kind of came along and sort of a big disruptive impact they had on banking was just their cost structure difference. We don't have branches, and so our just model is fundamentally different because we're not carrying that cost. I think generative AI has the potential to significantly reduce labor costs in different areas. And so I think one sort of lens on it that I have is when you start applying generative AI to sort of traditional businesses, even digital businesses that don't have large cost structures, how much more can you knock the costs down to operate? And I think that might be sort of a competitive lens on it over time, but it's still very early. And I don't know that we have a good sense yet of exactly where generative AI can actually remove human beings from the loop and then where it's just going to make them more efficient. And I don't know about you. Do you use it for your writing? I don't find it to be that helpful for my efficiency.
I've toyed around with it. Honestly, I haven't used it a lot. But again, like I'm addicted to looking at like primary source documents.
So we know this to be true.
Like on the one hand, it's been difficult to carve out however many hours it takes to read 299 pages of 1033. On the other hand,
I could have it read 1033 for me. I hadn't even thought about that. That's a great idea.
That's a great test. We'll see if it can adequately, like at a John Pitts level, summarize like the key points of 1033 so we don't have to read all 300 pages.
That would be amazing. Okay, so all right,
this is it to do. We'll come back.
Yeah, we'll mark that down as an idea. And I do want to revisit 1033.
What sessions did you go to, or moderate, I should say?
Well, yeah, I didn't get to sit in the audience for any, but I did host the Cannabis Banking Summit on Sunday.
This is a sector I'm very interested in and also do not know a lot about, so I want to hear what you learned moderating or hosting that.
Well, I was thrilled to get to host it because I was like, guys, I don't know anything about this. And they were like, that's okay, just get up on stage, be energetic, bring the experts up. So I did my job, and then I got to listen to the experts, and it was really interesting. I mean, they talked about the Safe Banking Act, and now apparently the new one's called the Safer Banking Act, and the third one will be called the Safest Banking Act. But apparently, stands very little chance of passage. You won't be surprised given sort of the state of Congress. They can't even pick a Speaker of the House. So there wasn't a lot of enthusiasm around that. There was, though, I will say, a lot of enthusiasm from banks and credit unions that spoke, where they kind of talked about the benefit that they got from doing cannabis was not so much like the business itself. I mean, it's a good business. A lot of times in their communities, it's like a problem because there's these big cash-heavy businesses, and it causes these like kind of negative externalities with businesses and consumers. So they sort of view it as their responsibility to sort of step in and help solve that problem. But what they said was like the real sort of superpower that came out of it was they had to build a much better risk management and compliance function than they had before. And so they sort of viewed it as a forcing function for getting a whole lot better at compliance. And by sort of forcing themselves to do that, it opened up the opportunity to think about crypto. Probably not great timing for that. Or to think about online gaming, which, as we've seen in Vegas, very good timing for that. Or even like, I think there might be a bit of an overlap between cannabis and then like banking as a service, generally, another topic that we're going to circle back to. So I thought it was really interesting that in the same way that sometimes you like come to a wall that's too high to climb and you like throw your hat over the wall so you have to figure out a way to climb over it, like cannabis is them climbing over the wall of compliance and figuring out how to do something hard like this at scale. And once they've developed those muscles, other things become easier. So that was kind of my 30,000 foot takeaway. A lot of details too, but that was a big one.
I mean, it and this is, not a political podcast, but one of the other sessions I found really interesting was Nigel Morris, and I stand corrected for all the Twitter followers who pointed out I tagged Hans Morris, wrong Fintech Morris. So Nigel Morris's session with Senator Mark Warner. And again, you, me, I imagine anyone listening to this spends most of their day, or at least working day, thinking about fintech, banking, etc. A point that Senator Warner made that stuck with me was that, outside a handful of people on the Senate Banking Committee or House Financial Services Committee, if you ask them, what is fintech or name a fintech company, they probably would not be able to answer you.
Sure.
And when I stop and think about it, okay, that makes sense.
Yeah.
And I believe he also drew the contrast, strangely enough, with crypto in the sense that has been so top of mind, given things like FTX and Silvergate, et cetera, that actually they could probably better answer that question given its higher level of salience versus fintech.
Fintech, yeah.
And I guess I don't really have like a super specific takeaway from that other than thinking about, so much of what can happen or what cannot happen in banking and in fintech is driven or at least heavily influenced by what's happening in, primarily Washington, D.C., but also state level.
Sure.
And, it kind of behooves all of us to help make sure that the people driving that agenda, are well-informed and particularly informed of the, potential benefits to their constituencies from these companies or from the space.
Yeah, no, that's interesting. I mean, it dovetails actually with another topic I wanted to circle back to, which is banking as a service, your favorite topic. And it's been in the water supply here, to put it lightly. A lot of banking as a service conversations, but the connection there to what you were talking about, I think, is there seems to be sort of an ongoing challenge from a bank regulatory policy legislative perspective of sort of being able to paint a picture about what the benefits of fintech are, because so much of it is just, well, this is a threat to the safety and stability of the banking system. We're seeing all kinds of kind of compliance failures, which we can get into. But I do feel like, I don't know how to put this, almost like banking as a service needs a better lobby, right? In a way, because it's like so much of it, I think, is seen as you're just doing new novel stuff that's creating problems, not you are enabling innovation that's helping like these legislators' constituencies, right? I don't think that message, to your point, is getting through. Open banking, which is different, I think has a very different lobbying structure. And I think there's been a lot more proactive education of policymakers on that front. But I don't know, what's your sort of takeaway on like the current temperature of banking as a service and kind of what's happening?
I think the temperature is high.
Yeah, it's hot. It's hot here. Yeah.
In my sense, the regulatory apparatus in the U.S. anyway, tends to be backward looking and also fairly slow moving.
Right.
And, somebody I was speaking with earlier today who is smarter and better connected than me.
That narrows it down a lot. No, I'm just kidding.
Said that they wouldn't be surprised if it's a 3 to 5 year process unfolding, for the banks with the most exposure in this space before you sort of see this current set of challenges, kind of wash through. I think to your point, it's also a learning curve for the regulators to understand where the risks here lie.
Yeah.
A lot of what we've seen come out publicly from an enforcement standpoint has been, BSA, AML related. And I think part of that is driven by, that's an area that bank regulators really understand.
Yeah.
They have a very clear examination manual and know how to go in and, check for compliance with those regulations.
Yeah.
Other areas that may pose risk from these types of fintech bank partnerships, or particularly with middleware providers, may be less understood, less defined, and it may take time to understand, hey, if I'm looking at a 5 billion asset institution that's doing these kind of activities versus this other one, what are the right questions I should be asking? And I think that is something that is unfolding now.
Yeah. No, I mean, it seems like it's not very well tailored at the moment, right? I mean, to your point about regulation kind of having to catch up and moving slowly and not maybe fully understanding what's happening, what I've heard is from like a bank examination cycle when they're talking to their prudential regulators, what I've heard is they're just getting a ton of homework. Like they're getting a massive number of questions. A lot more of them are on banking as a service, but I kind of get the sense the questions are not necessarily, they're much more specific, but they're not super tailored, if that makes sense. And so it's like, just tell us everything, like this is every question we could think to ask on one piece of paper, go answer all these questions. And I was talking to a bank that was saying they spent like $1 million working with a consultant to answer one of the questions that they were asked on this thing, right? And so like, when I think about banking as a service...
I'm in the wrong line of work, apparently.
Yeah, you really are. Well, you could actually like jump into that line of work. I would just have to write about it. But I think the thing that occurred to me there is just the cost of compliance in banking as a service seems to really be going up. And to your point about middleware platforms, that's been a focus. And it seems like the original promise of the middleware platforms, which was, we will make this an incredibly low-cost, scalable way to grow. I'm not going to say it's dead, but it's definitely been challenged on a number of different fronts because, maybe you can help with like the technical integration costs. Maybe you can help a little bit with like the customer acquisition, like help us get to know fintech programs cost, maybe a little. But compliance costs, I don't think there's really much scale to be had there. I mean, you can use technology. You don't have to throw bodies at the problem, although community banks tend to like to throw bodies at the problem. But there is technology, but you can't not invest in compliance. You can't outsource that compliance. That seems to be more than anything like the message that's coming through crystal clear is that model is just not going to work for us.
Well, and it's changing the risk reward calculus of what programs are attractive to a partner bank. And I think the case in point is like the Mercury Evolve Synapse situation, where it's like Mercury had the lion's share of the deposits. It's the most attractive program. And if you're thinking about, okay, I'm a bank, I have limited compliance resources. Do I want 99 small programs or do I want one big program?
Right.
I want one big program.
Right. Yeah, there's kind of a flight to quality almost I've found in banking as a service right now. It's double-sided, right? Because the fintech companies want to work with quality sponsor banks, right? Like not one that's under a consent order, one that has their compliance buttoned up. I think compliance has become a huge differentiator in the space over the last 6 months to a year. But also on the BaaS bank side, it's not worth their time to work with everybody, right? And what I hear over and over is, we have the ability to be really choosy right now. And so I feel honestly for early stage fintech founders that need to find a partner bank, like it's kind of tough going out there right now.
Yeah, and I think it remains to be seen what are the second order impacts of that on innovation, right? If, again, if I'm on the bank side and my risk tolerance has adjusted down, I may be less likely to want to work with a program that feels like it's in a gray area or coloring outside the lines.
Right.
And on the one hand, like that can be a rational decision for an individual bank to make. But in aggregate, does that sort of inhibit experimentation with new products, new business models, new ideas?
Right. Or like less experienced founders who may have a good idea, but they're just not going to make it through the vetting process the way that a more experienced one would.
Yes, pattern matching. I want repeat founders. I want Stanford grads. Y Combinator companies.
Yeah, it's not trying new stuff as much. Can we wrap up with 4 minutes on open banking in 10:33?
Yeah, let's do it.
I think we can cover everything about open banking in 4 minutes.
Only if you use Gen AI to summarize it.
Which is, again, a good idea. I'm going to do that after this because I still haven't read the full rules. But what was your sort of one takeaway? I know you've listened to a lot of conversations. I think you went to some sessions where they were talking about this. Like, what's the thing that kind of jumps out?
There is some perhaps level of disappointment at the scope of types of accounts or types of institutions covered, with the important caveat that that was a legislative decision made 13 years ago.
Right.
That was not a decision that was necessarily entirely within the CFPB's control. I think the positioning, particularly coming from the Bureau, that this is something that's going to facilitate ease of account switching. I don't buy that, for lack of a more eloquent phrasing.
Yeah.
People don't necessarily, and we have evidence of this from other markets, particularly like the UK and use of the UK current account switch service.
Which no one uses.
Very few people use it.
Yeah.
I mean, people don't tend to close accounts. They tend to open incremental accounts and maybe let one go dormant or use multiple. So I'm not necessarily convinced we're going to see a situation where like once, in however many years when this is finally finalized and implemented. And as we know from the payday rule, which is still not implemented, whatever, like 7 or 8 years later,
takes a while.
It could take a while.
Yeah.
I think we're less likely to see a legal challenge in this case, just because the sort of stakeholder math is quite a bit different than in payday.
Where everyone is on the other side.
Where it was quite a uniform pushback from the industry.
Yeah.
But I'm not necessarily subscribing to the argument we're going to see a wave of account switching happen once this goes live. I think there are other areas, lending products, credit cards, where that might be more likely.
No, yeah. I mean, I think like cash flow underwriting seems like a big winner coming out of all of this because it was specifically sort of referenced in the rules. There have been a number of kind of companies here at the show that have been announcing fundraisers or launching products around cash flow underwriting. So it seems to have a lot of momentum. So I do think there are use cases where it'll like be helpful and will make more sense. I think the only other things I'd add to that are, one, there was a very strong emphasis on a fair standard setting body. And the only name that anyone ever talks about is FDX. So like it's going to be the financial data exchange setting the standards for this. But the question is, how will FDX have to change what it does in order to be compliant with what the CFPB wants them to do? And, there's lots of concern, I think, coming from the fintech side of the table that FDX is largely sort of steered by the big banks who have been much bigger participants.
I got some aggressive pushback when I wrote something to that effect.
Did you?
Yes. That it was not fair to simply look at like counts of number of board members or something.
Sure. No, yeah. I mean,
so they dispute that characterization.
And that's, I think there's some fairness to that. I think the other thing about it that is a problem for fintech is fintech companies haven't participated. They've had the opportunity to participate, but they haven't participated. They outsourced caring about this problem to Plaid and MX and Finicity and those companies. And they didn't actively participate in the standard setting themselves. And so I think it's a little rich for fintech companies to complain about FDX because like it was sitting there. You could have joined and gotten more involved in some of those working committees. So I think FDX is going to have to adjust a bit. And then I think the other thing that I've noticed is there's not a lot of discussion about how these rules are going to apply to fintech companies and non-banks as data providers.
Yeah.
And I think that'll be really interesting because like Apple has a wallet. They have more than $10 billion in annual revenue. That technically should mean that they have to comply with this requirement to provide data 6 months after the rule is finalized. I don't think it's going to be quite that easy because Apple's not a big fan of forking over customer data. And I think there's going to be a lot more fights on that side of the table. Fintech companies, again, they don't talk about it. They try to keep it quiet, but they don't want to share their customer data any more than banks do.
Yeah, I mean, there's been, I think, a perception, probably not incorrect, that the relationship has been data goes from banks to fintechs. But to your point, this will develop or is developing into bi-directional. And does Cash App, does Venmo, does PayPal want to be giving data to JPMC, to Citi? So it'll be interesting to watch how this continues to unfold.
Yeah, no, I totally agree. That is all the time we have. We have to get in the next podcast host for the coveted Money 2020 podcast booth. Jason, I'm so glad we got to do this in person. This was so fun. And we will talk again in about a month to recap all the fintech craziness.
Sounds good. Thank you so much.
Thank you.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.